Hello, people. Welcome back to Purvike Pravachan. We're done with HRM, and now we have IFS exam. And basically, we have five chapters in IFS, out of which we'll be doing the first chapter, which is known as Indian Financial System. Okay, and in this chapter, I guess we have around 8 to 9 subheadings that we are supposed to study, in which most of them are like really easy, and most of them are something you need to actually get into the details and stuff. So let's get started. Okay, people. Firstly, I will be dividing this video, I guess, into 2 to 3 parts so that it's like not over lengthy and you guys can literally just watch it like chote chote parts mein. And yeah, let's start with the meaning of financial system. A financial system is a set of institutions such as bank, insurance companies, and stock exchanges. So basically, it is a place where the exchange of funds takes place between the people who are the lenders and the people who want to receive the money, who are the borrowers, right? That's the basic meaning of this. Okay, now we have the features and the objectives of the financial system. Now, the thing about both of these things is that they are just like pointers. You don't have to go in depth of them, so basically you'll have to memorize these, but I'll read them out for you so that it becomes easy. Okay, so we'll start with the features. The first feature is that it provides financial intermediation between ones who offer and the users of the fund. The second thing is it's an avenue for mobilizing savings, investment, and surplus resources for productive purposes. The third point is it helps risk management. Okay, the third point is that it does risk management through insurances. The next point is resource mobilization through mutual funds and capital markets. It also offers various financial services to meet up your particular needs, and it consists of both organized and unorganized sectors. And last point is it is a strong pillar of the growing economy. Okay, next we have the objectives of the financial system. The first objective is to encourage savings and investment. Second is to ensure efficient allocation of funds and resources. The third one is to provide financial services and facilities. Fourth one is to promote capital formation. Fifth one is to maintain financial stability and economic growth. And the last one is to facilitate smooth flow of funds within the economy. So as I told you, these are the pointers. You just need to by heart them. And yeah, we'll go to the next thing, which is called components. This is like a 15-mark question, which is actually detailed and kind of important, and it can also appear in the last 5 marker. Okay, for the components, I had drew this chart, which is basically not really visible. I'll anyways attach the image onto the screen so that you guys can see it and it becomes more easy. And I'll also attach maybe the explanation part of it so that I've not gone in-depth explanation of every single point. I've just did the main pointers. And like, let's say if you want to know the meaning of the examples and everything for your 15 marker, then you can just go through that page, okay? So, okay, firstly, starting off with the components, we have 4 components, okay? First is the financial institution, second is the financial market, third is the financial intermediaries, and fourth is the financial services. So, I'll start with the first one. Financial institutions are organizations that collect saving from people and provide funds to businesses and governments, right? And now there are two types of financial system. One is banking, other one is non-banking. Banking institutions are basically the ones which accept the deposit from the public and provide loans to the people who require. Non-banking institutions are they provide financial services but do not function full-fledged like banks. And now the bank is divided into two parts, okay? One is commercial banks, other is cooperative banks. Commercial banks are the banks that provide banking services to the general public and businesses. And example for commercial banks is something that I've given here: public sector, private sector, RRBs, and foreign banks. And then we have cooperative banks, which is basically banks are owned and managed by the members and mainly serve local communities. And then we have the non banking institutions, which are divided into two parts. First is organized, which is basically the registered and the regulated institutions, for example, mutual funds. And the second is unorganized, which is basically like the local money lenders, the chit fund people. So these people are not really like registered registers, but they do the same functions as a bank does, but without the registered part of it. It's a bit risky, but yeah, it exists. Okay, now we have the second thing, which is known as financial markets, where assets and securities are bought and sold. So it's basically a market where all the assets and securities are bought and sold. Now this market is divided into two parts: money and capital market. So money market is basically a place where short-term funds and securities are bought and sold. At the same time, capital market is where the long-term funds and securities are bought and sold. And the picture that I'll be attaching will have all the further description, like under money market you have treasury bills, commercial bills, and different stuffs, and the same thing you have under capital market also. Next up, you have financial instruments, which is documents and contracts that represent ownership, debt, and financial claims. They are divided into two parts further: term and type. Term is short term, medium term, and long term. Short term is something which is up to 1 year. Medium term is which is 1 to 5 years के बीच में. And then we have the long term, which is more than 5 years. In the types, we have three types. One is primary security, second is secondary security, third is innovative instrument. Okay, primary securities are basically directly issued by the company to the public to raise fund from the investors. Secondary securities are financial intermediaries against primary securities that they hold. Example, mutual fund units. And third, we have the innovative instrument, which is basically a modern financial instrument created to meet changing financial and investment needs. Okay. And then we have financial services, which are two types: fund based and fee based. Fund based is basically where the money is actually involved, like the money gets exchanged and everything involves the actual money in it. It's basically services involving actual deployment of funds, for example, leasing, hire purchase, factoring. And then the second thing is fee based, where services where institutions earn fees or commission without direct deployment of money. Here, the money is not directly involved, but through commissions and other things, it gets involved. The further detail of these things, right, will be on the screen as well as in the other upcoming chapters, because other upcoming chapters are the main four components itself. So maybe if you want to elaborate your answer more, you can just add those pointers to this also, right? Okay, next up we have the structure of the financial system. Now, the structure of the financial system basically consists of 2 points, okay? But the thing about it is that it has a detail of enough one page. So I'm not sure if it's a two marker or it's a five marker, but anyways, we gotta read it. Look, it has a good enough info. So yeah, I'll just read it out and you can just go with it. So what is an organized sector? It's divided into two parts: organized, unorganized. Organized sectors are something which are registered and regulated with the government and by the government. At the same time, unorganized are the sectors which consist of informal financial intermediaries that operate outside the formal regulatory framework. Okay, now let's go with the organized. It includes like bank, mutual fund, stock exchange, and these are managed by the RBI, SEBI, IRDAI, and all those things. And the purpose of this is it provides safe, regulated, and efficient financial services to individuals and business and helps in smooth functioning of the economy, right? Unorganized, it, as I told, it's not registered with the government or anything. It is basically outside the formal regulatory framework. It includes moneylenders, chit funds, indigenous banks, and local finance providers. The purpose of this is that the unorganized sectors cater to financial needs of unbanked rural and underserved sections of the society by providing easy and quick access to the funds. So it's basically for the rural people and the places where the banks are really available. So yeah, that's why they do the functions. Okay. And next we have, I guess, another 3 points to go. One is the SWOT analysis. One is the trends. The like two more. Maybe I'll do that in the next video. So yeah, subscribe for more and click the bell icon, because I'll be posting the videos like there's no particular time period. Like I'll be posting it on this time or that time or whatever. I'm literally sitting in my night and shooting the video because who cares? You have exams. So even I have exams. Anyways, subscribe and follow for more. And yeah, thank you for watching Purvi Ke Pravachan. See you in my next video. Bye bye.